Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago talking crude oil. Tight range today, but a volatile session. It's tight range in terms of crude oil itself, getting down into the low 67s, up almost to 69 on WTI, finishing just basically unchanged, down about 20 basis points, actually 18 basis points, just short of 0.2%. The dollar was part of the main reason. The dollar sold off today after comments from the White House talking about interest rates and the Fed, implication being that the White House was trying to sort of exert pressure on the Fed to keep rates lower, which hit the dollar a little bit, and you got a rally in crude oil from that. That was most of the recovery we saw off of the low 69 levels, was based off of the dollar, helping to drive crude oil higher. A little bit later in the day, we got Baker Hughes rig counts, which dropped 9 rigs total, 5 rigs of crude. So the crude oil drop, 5 rigs. That's after 2 weeks of increases. So taking a little bit of a supply cue from there and helping that late day rally was those Baker Hughes rig counts. We've got a lot of data pointing toward a mix in terms of bullish bearish tone. We've got Russia upping barrels, Saudi Arabia saying they're not going, Libya now shipping somewhere in the range of 800,000 barrels. So a lot of mixed signals in terms of the supply and demand story. And I mentioned this probably 1,000 times. When all else is equal, the dollar tends to drive it, and then the rig counts is the secondary piece of data. We get EIA this week, or we got EIA rather on this past Wednesday, and we're seeing refinery counts, or refinery utilization rather, drop. So that's showing a little bit of weakened demand, but at the same time, the draws are turning into builds, which showing essentially a little bit of further draw on those tensions you're seeing in the shale regions. Shale regions, we've got 7 of those regions reporting record production. And then lastly, Strategic Petroleum Reserve, the SPR, is being talked about in crude oil circles as President Trump, the whole political situation seems to have maybe missed the mark, rather than saying failing, missed the mark in getting Saudi Arabia to produce more barrels. Russia has produced more, but that was prior to the meeting in Helsinki. There's been no comments out of either the Kremlin or the White House that they even discussed crude oil, let alone convince Russia to produce more. So it looks more and more likely, at least in crude oil circles, that the SPR is going to be where those extra barrels come from to drive prices lower. No official announcement, but it's something that may come up next week when crude oil prices are talked about in political circles. This is Bob Iaccino talking about virtually unchanged WTI from the CME Group trading floor in Chicago.